It feels good to be back. Feels good.
We're live now. I put on the intro and I didn't click go live. So there's always one button I missed, but here we are.
Yep. Back from
So,
Wisconsin. I had a week up there. I think if you cut my veins, I would bleed cheese curds and uh, spotted cow beer. So,
yeah, God, never thought I'd say this, but I'm getting kind of tired of salmon myself. So, although I got to tell you, last night I cooked a mean piece of halibut,
oh, yeah,
pistachio crusted halibut. I'll tell you what,
that's
that was
awesome.
pretty darn good.
Yeah,
But
you are a pretty good cook. You're a pretty good cook. I swear to God.
I'm plugging along now. If you're a surfer, this is a good weekend to go to San Diego. Got a big storm barreling in, so it's supposed to hit Los Angeles with 80-mile-an-hour winds on Saturday, and possibly some rain in Arizona. So that'll be welcome news. The rain, not the wind, that's for sure.
Yeah.
But boy, I wanted to jump right in on these rates, and like I say, wow, I didn't see that coming. That doesn't mean that I didn't see rates going higher, because that's always a possibility. But what what I mean by that is, I guess I haven't seen the why yet, because it's not like the Fed meeting notes had anything of any significance in it that made them go, holy cow, and the bond market react, because the bond market's been pushing back against the central bank for a long time. Have they
Mhm.
just finally capitulated and said, well, I guess we're in this for the long haul? I mean, what did the charts tell you?
I think they have a little bit. I mean, if you take from the Mortgage News Daily, interesting news. I mean, here we got today. Well, today the 5.5 coupon is up 16 basis points. I mean, we are this morning we were high at 4.27 on the U.S. 10-year Treasury. So I mean, we busted out. These are the prices. I'll flip this around quick. Let me just flip this back here on the yields. This is I mean, it's just been basically a methodical. How did Mortgage News Daily said that the traders are migrating toward higher rates in a methodical way with glacial momentum. and and they said
Glacial momentum. I like that.
glacial momentum, and that's basically kind of what this is right now. It's just this, you know, death by a thousand cuts. We had a spike up here in rates, and then we a little relief, and then like I said, we're seeing the 10-year hit 427, 431, right around this range. And they said Mortgage News Daily was how they put it. They basically it's uh, if you take your mortgage rates, if you take your mortgage rate news on a daily basis, you already know that today's headlines were highly likely based on the proximity of multi-decade highs discussed yesterday. But they said today simply ended up being another moderately small incremental step in a higher direction. And there hasn't been any really. There has been news out there. It's kind of like, how can I liken it? It seems as though the high school senior girls are sitting in the hallway talking about this one guy. You know, this is kind of building. Does that make sense? And they're just kind of
I'm trying
hush.
to correlate it.
Yeah, huh?
I said
What's
I'm
that?
trying to correlate it here. So
Yeah, I know. I
keep
just came
going.
up with that. But I mean, they're all sitting in the hallway talking about this, about something, and you're like, okay, what's going on? And it just seems as though there's been headlines, but it's just been this building of slow rates ticking up, and just my psychological feeling, this is just me, is that something is slowly building, that something else is going to happen on their other side. We talked about this in the beginning of the year, that you and I had talked about, and I said this year is probably going to be, I know I mentioned in January that this is going to be a year of muddling along. And it just felt that way, that there was, I don't know why, nothing really stood out to me, but I just kind of felt it just going to be one of those years. We got September with the Federal Reserve, obviously the news coming out in September. The Feds are meeting. You know, who knows if they stop, they have one more pause. It just feels as though we had talked about how trends build in 6 to 8, 12-month cycles. This has been that cycle that's been building up. Who knows what's on the other side? I think we're going to see some relief down here, but it's going to be in the next year. Does
Well,
that
it's
make any
interesting
sense?
because when you get above 7, whenever we even go up just an eighth of a point, I've noticed that the articles and the conversations come out. Here comes 8%. Here comes 8%.
Yeah.
Like, well, we're definitely
Well,
higher today, but we're not knocking on 8%'s door yet. But then
well,
if
I'd be
we
a
go
betting man.
down a quarter of a point, they go, okay, here come the 6s again.
Yeah. Well, I will tell you, flip to my chart here. Here's rates right now. I'm gonna give a breakdown. Here's a $475,000 purchased, 5% down, so 95% loan to value, right? I haven't given anybody rates here in the last couple of weeks, so I thought I'd give a breakdown. This is probably going to be good because, like I said, I have not presented rates in this manner. This is just FYI. This is just a scenario that I pulled up. 780 FICO score. You're looking at right now, like this one bank is 7 5/8 is the a credit. I go down my pricing scenario desk. I mean, because there's some different lenders that have different, they have better speed, they're faster, a little bit service. It just depends where I go with different lenders. This lender is at 7 5/8 with a cost of $200. So about 7 5/8, 7.5 is about what you're looking at. But I'll tell you what, my son, that's because I'm a broker. I'd be a betting man. A this is not a blanket statement, but I would be a betting man that there's some mortgage retail banks, where they've got their own kind of in-house stuff. I guarantee you, they're at 8 and 1/8. I'd be a betting man to say there's some retail banks that are 8 and 1/8 right now.
Wow.
Based,
Okay.
so that's just my my overview. But it's going to take some time. It's got the rates are the highest they've been in 20 years. So, but it just like you said, once again, I go off a lot of looking at the data, read the data, talk to people, and then I go off a feel what my gut says, because sometimes your gut is pretty right. And I think there'll be something around the corner. When is it? They say it could be months, could be maybe we are going to stuck in this thing longer than you and I talked about.
Yeah, I shared the chart yesterday on our show about affordability, and it showed, three things. Either house prices have to come down by 69%, or no, house prices have to come down by, I can't remember, I think it was 47%. I'm spitballing here. Wages
Mm,
had to go up by 69%. Interest rates had to go down by 4 on an individual basis, or a combination of all three has to, in order to reach the affordability we had at pre-pandemic levels. So it basically just illustrated how out of whack that we are when it comes to affordability. And but just looking at our local market, Pat, I mean, here's our 7-day moving average, which kind of shows you things quicker than looking back a month or the
mm,
August data that hasn't come out yet and the September or the July data that is coming out. This is today. So we can see that new listings did go up just a hair, but when I go back to last year, that happened again, so I'm going to say that new listing blip we saw here was more of a seasonal move than anything else.
mm.
But the one thing that sticks out is that we are not budging here on the number of new contracts. They're staying right there. Well, who are the buyers? Well, it's the majority of this is baby boomers. Baby boomers, um, they're not struggling like first time home buyers. They've got equity, they're making moves. A lot of them are staying put because they're locked into high mortgages, but many of them are selling in different parts of the country and moving somewhere else where they can afford to pay cash, and they're pretty much fueling this market. So, while first time home buyers are really struggling, the baby boomers are sitting in the catbird seat and going, well, this isn't bad. I got equity, and there's just enough volume out there to buy your house. So if you're listing, you've priced it at market, you'll get it sold. And you can see here on the CMI that Chandler finally took a 7% dip in CMI, but they're still at 308. And
Mhm.
Gilbert went up. So the rest are kind of all in red with the exception of Cave Creek. But Queen Creek is now in a buyer's market versus seller's market. Maricopa's right there. The outlying areas where there's a lot of new builds going on. And you can see here on our listings, this is listings under contract. It's amazing to me when I look at these and see that last week we were 7,076 under contract, and this week 7,600 or 7,069, a difference of just a few homes.
Yeah, yeah.
That's how consistent this is, and it's flatlining. So now we can count on, I think, let me look at this year. This purple one here is 2023, 2022. So I think we can count on this line mirroring last year when it comes to declining. Nothing in the cards says that listings under contract is going to go this way. So if you're looking out in, for the fourth quarter, it's not going this way. Mm-hmm. And we have a comment here from Harold that says, here in Hawaii, but we still like Sierra Vista as opposed to Phoenix for property, or Hereford to board my horses. My girl wants me to buy Gilbert, but she'll get to East Mesa, or Apache Junction. Girl wants to buy, house property in Gilbert is going to cost you a lot of money. But so anyway, the reason I illustrate that is that this is where we're at. We're flat right now. I think we're going to, the rest of the year is going to be flat or down. It's not going to be up in new contracts. Our average list price per square foot, I think it's going to be the same thing. I think you're going to see this start to do what it's been doing here, going down. This is just kind of an anomaly where it went up a little bit. Mm-hmm. So if rates stay where they're at, then then we'll come down. Sean's saying, I have to sell in mid-September. Will I be in trouble? I know there will be another rate decision in September. I think the rate decision for September is already getting baked into the cake, Sean. Don't you, Pat?
Oh, yeah. That's why, I think, well, if you look at the rates, the rates have been methodically going up. Go back, go back to my chart real quick here, if you could. This is why you're seeing rates do this right here. I think this is kind of getting September's news baked into the cake already.
Because we've already seen several times. Now they're listening to the conversations, right? So the bond traders are going, well, and there's more to it than just the Fed. I'm going to touch on that in a moment. So actually, I'm going to touch on it in more of a question. But Sean says, so they're calculating a hike, and I think that would be a yes, right?
Yeah, they're calculating a hike, but then once again, if they do hike in September, what happened? 9 out of 10 times, just like I said, spitballing it, but rates go down that day, and then we get a run. So everything is usually a month or two. Like I said, we're a month away from the September Fed meeting, and it's just been Chinese water torture with these rates since about last month, July.
Is there pressure on rates because of the amount of borrowing that the Treasury has to do because of our deficit and national debt?
Yeah.
The Treasury auction.
Excuse me. Sorry. Got mothball stuck in my throat. I think I don't think you can sit and say it's one thing. I think we just got a myriad of different factors that are fighting everything. Too much money, the debt, inflation. You can't sit and say what one specific thing has caused this whole thing.
Well, I'm doing that to kind of sway us away from the Fed for just a moment. That says it's not always just the Fed. It's not always just the central bank that's moving rates. It's our borrowing.
Todd Phillips coming to that question. I've never really. Is increase in Treasury somewhat seasonal? I've never heard it being seasonal, honestly. I've never heard that before.
Todd, do you think they're parking in treasuries as a safety net during earnings season? That's kind of the impression I get on that question.
I don't think
Sean is following up and saying, if they don't hike, does this drop? I would say, I think right now they're not betting on a hike. I think right now they're betting on them staying where they're at.
Yeah.
With the possibility of a hike.
I think your
Now, if
next. I think your next big move is either. I don't think you're going to see anything if the. This is just like I said, two guys that you're in Washington. I'm in Chandler, Arizona, but just two guys yapping at the mouth. But even if they stay the same or if they raise hikes or raise it, I think it's going to be the same kind of response. Now, if they came out and said they're at cut rates, that's where I think you're going to see obviously that momentum change. That makes
well,
sense.
but then the other thing to keep in mind too is that if you look at as you're looking at, you're talking about selling, um, it's still supply and demand. So
Yeah,
Sean and Gilbert, I mean, their CMI index is 212. The amount of homes for available in Gilbert is very low compared to um, the amount of demand we have. So yes, we're going to see some demand drop, but the difference between the two, and I go back to my 7-day moving average. We're
yeah,
at 74% of new listings now are going under contract. We didn't see price decline, so that got down to, oh, Sean's in Mesa. Okay, I thought you're in Gilbert. So, but isn't your house you're selling? Is it in Gilbert or is it in Mesa? The the difference between the two is when we got down to like 65% of new listings going under contract, that's when we saw the downward pricing pressure. So unless we see a big change in that, and I'm going to go back to that for just a second because that's what you're seeing here. It's the gap that I talk about, the gap
yeah.
between the two. Now, right now you're seeing a slight uptick in new listings, but that's nothing. Again, it's seasonal, and we're staying flatlined here. I don't see new listings creeping up much higher now going into September.
No,
I really
I don't
don't.
either.
And
I
I
don't
see
either.
it staying at this 74 to 79% ratio, which is good for people listing their homes. So I don't see that, raising its ugly head and being, I don't see us going from 74% today to 65% in September,
Yeah, I
unless
agree.
all of a sudden you're 8.5% in mortgages. But remember that, the rates that are out there and everything affect more than just real estate. So the decisions on where rates are going by these bond traders is
Credit
far
cards.
deeper than you and me wanting to buy or sell a home.
Yeah, credit cards, auto loans. Credit cards is a big thing because obviously the debt. They said that the consumer debt, we're over. It was 1.7 trillion, and climbing.
Yeah. And then the amount of interest that we pay on our federal debt has now almost exceeded the
Yeah,
budget for national defense.
yeah.
So
It,
like
I think
like
they really have to.
Barry had said last time, the Fed's going to keep going until they break something. Well, they're just about there.
Yeah, it just feels as though it just feels like we're toward the end of this. What it is, I don't know, but I just feel like this is kind of weird. Like we talked about this a month ago. Even though rates have gone up, home prices have gone up, it seems like it's a balanced market. It's just up. The level has been shifted up this way. Now it's just this level, this balanced market up here at a much higher level.
Well, I think that
Does that make? I mean, it just feels that it's not pushing either way. It's not this rush to sell or
well,
rush
yeah,
to
and
buy.
The Cromford Market Index illustrates that, but I think there's we got to be kidding ourselves if we think home prices are going to be higher next year than this year. Personally, I don't see that. I don't see anything in the cards that's going to make that happen. I think that's just my opinion versus Cromford. It feels like we will, so long as the inventory remains the same. But I think
Yeah,
there's um, it's really hard to read the tea leaves and see how hard the recession is going to be. If there's one, what's the pivot point for the central bank? How
yeah,
are banks going to hold up? And so it brings me to what I found this morning and I was sharing with you. Um, in other words, the title here was How to Create a Housing Crisis. And this is also very entertaining. I gotta share this with you. So he's talking about we're going to make our own housing cocktail, and I'll show you how the crisis was
I love
created.
the title, "Housing Crisis." It's easy, just add default.
Yeah, yeah, yeah. And he goes. So he talks about the kind of cocktail to have here, and he said, "I'm moving it back and forth because I'm trying to find it." Anyway, he goes, What shall we call this? The mortgage mojito madness, evicted martini, meltdown margarita, pricey pina colada, shaken market sour, or bitter interest bubbly? So those are our choice of cocktails. So he
Okay.
goes, get the cocktails ready. Here we go. How do you create a housing crisis? First, ingredient number one, print lots of money. And that's what happened. Shown
Mhm.
right here. We've printed over 25 trillion since 2008. And since 2020, we've leaned on that turbo even more. So the amount of money in the market. And yesterday I showed
Jesus.
M2 velocity, which is M2 is the amount of money that's in the system.
Yep.
Velocity is whether or not it's moving, right? People buying, selling, consuming. That chart's going up. Everybody go, oh, we're in recession, everything's bad. Well, guess what? There's more spending going on now. So that kind of surprised me. That puts more inflation pressure out there. And he says here, what's this have to do with the housing prices? Well, inflation, zero interest policy, and excess capital being pumped into the economy have inflated everything that goes into the housing mix. Says nothing to do with who's president, who's going to be president, how much the Treasury is spending. The central bank injected so much money that housing had no choice but to go straight up. Then we had inflated material inputs to construction. Remember when two by fours, a stack of two by fours is up
Oh yeah.
1,000%? Okay. Shelter costs accounted for a whopping 90% of all inflation during the last CPI release. 90%. So if they want to get down to 2%, they've got to lower costs of shelter costs. Now, ingredient number two, inhibit builders. This gets really interesting when you deep dive into it. In other words, it's really hard to build. It's difficult. They're saying they're making it as difficult as possible to build. What is the main component of this ingredient? Single family zoning. Did you know that it takes on average, and this is San Francisco, but you can probably say this in most markets, for a new multifamily development takes 627 days to get the permits. Single family home permits take 861 days. He's saying Canada's no different. The total fees builders can expect to pay the local government before putting shovels in the ground is over $189,000.
Yeah.
You haven't even built the house yet.
Well,
It's
isn't there a saying,
189,000.
we're the government, we're here to help?
Well, I remember we had a housing and urban development guy named Jack Kemp. Remember him?
Oh yeah, I remember him. Yep.
He had a quote that said, "If it wasn't for the government in housing, we wouldn't need the
Everyone.
government in housing." And I'm going to show you another example at the end
Yep.
here. So if Sally Builder wants to put a sixplex in Toronto to help relieve the supply tension, she'll need to fork over $1 million to the government. Ignore that she's bringing new taxpayers and increasing property taxes to building the sixplex in the first place. Got to come up with $1 million before you even start digging. Same
Mm,
is true to the US. 40% of the costs of new development result from taxes and fees in various levels in government. So let's keep that gravy train going and we'll get to our housing crisis in no time. Regulations everywhere. Then the third ingredient he said here is nurture demand. In other words, you better get homes because they're not building anymore. We need to promote the American dream, allow new home builders to over leverage with debt, reduce the types of homes that are more affordable, keeping them constantly house hungry. Seeing some of that now. But
mhm.
then, number of new homes below 1,400 square feet, they're not building smaller homes. That's
Yeah.
killing it, according to national realtors. Now, this one I want to look at, call out greedy developers. Okay, so these developers are making too much money on their house. The people that are building the homes, they're making too much money. Here's the numbers. I'm going to creep up to this. Developer margin after tax, 10%. Construction workers after tax, 17%. Landlord or material providers, 23%. Government, 31%. Government makes more money on that house that was built than anybody else in the pipeline.
Yeah.
It's like gas
It-
prices. I'm visiting up here in Washington State. They have a 42-cent per gallon gas tax up here in Washington State.
so basically, what you're saying is get the government the hell out of the way, and
Yeah.
shit will get a lot better. I mean, excuse my French, but you just kind of got my hair in the back of my neck going a little bit. Just as I quietly was sitting here seeing this stuff.
Well,
And
ingredient
I mean,
number
it just
5 is to put band-aids on the situation. In other words, okay, we're going to adjust this and fix this. Then we're going to move on. We're going to fix it. They're going to put band-aids on it.
yeah, yeah.
And
Well,
it's just,
it pisses me off to see, like you said, the I really think that the government, yeah, that about the regulations, the housing permits. I literally was just telling somebody about 3 days ago that if I was back in Wisconsin, we were talking about that. I said the biggest and easiest way to help housing would be to really deregulate all this crap, these regulations on building, the permits. Loosen up. There's not a lot of land in Phoenix, but there's land out there. They could loosen it up, but it's very frustrating to see this because once again, we're from the government and we're here to help. It's such a BS. Just get them out of the way, but it never will happen that way, unfortunately.
Phoenix went through a brief period where they really streamlined the permitting process for
Yeah.
getting new businesses, and it
Yep.
just took off like crazy. And
Yep.
if you get the fees out of the way and the nonsense, you'll spur growth. But that's a conversation for another day. But I
Oh
think
yeah.
the
Yeah.
situation that we're in now is, if you want more building and you want building of more affordable homes, don't make it a government program. Just make it easier for people to build affordable homes. It doesn't need to be, because even these cities and counties that are building affordable housing, they can't even build it at a decent price.
No, no. Well, look at Fannie Mae and Freddie Mac. They're still under conservativeship of the government. They're they're basically feeding the Treasury billions of dollars on a monthly and annual basis. I can't remember their number, but they just had another record quarter. Um, I think they're cranking Fannie Mae or Freddie Mac. I'm kind of thinking the numbers off the top of my head, but I think they had net profit last quarter of I want to say like $2 or $3 billion last quarter profit, and they
Well,
basically feed the Treasury that money. That's
yeah, and it's
the
still not
Fed,
enough. We still have a deficit.
huh?
I said it's still not enough. We still have a deficit.
Yeah.
But in Arizona, there's a lot of vacant land out there too that can be not vacant land, but vacant lots. If you really pull up and do a search on vacant lots in Phoenix, you'll be really surprised just how many are sitting there with nothing on it.
Oh
You
yeah,
can
yeah,
see that
yeah.
in Tempe as well. And
Big
not that
film.
we want to completely squish everything and take up every ounce of land, but there is room for affordable housing without making it a government project. In other words, there's a lot of smart people in this world. Just get out of their way.
Yeah,
And because I've just showed you the numbers that it's not greedy developers that are getting the largest slice of the pie, it's the government. The government's getting 37%. So now in Arizona, right now, what we're seeing a huge influx of population and job growth, but we're seeing a market that's extremely difficult for first time home buyers. We're seeing that new construction is putting a lot of incentives out for first time home buyers. As I'm seeing on my vacation up here in Washington State, they're throwing. Somebody said last week down in Arizona that their mother got. It was one of the comments on it. She got interest rate buy down to like 4.9, 4.9 or
mhm,
5.9 and $7,500 in closing, but she chose to take 5% off the list price. So in other words, they're still throwing you some candy out there and developers, but not all of them. Depends on how big they are. And like Jackie and Ruby said yesterday, and that's starting to come down a little bit. So we may see that advantage from new builds start to slide down as we get
yeah,
into 2024 because they don't have the pools of money available that they did. But that's the market that we're in. Now,
yeah,
what's going to make first time home buyers come in? Time. It's going to take time for affordability to adjust itself. Are we going to have a soft landing? That's what everybody hopes for. We could come. The only thing that's going to make rates come flying down is some type of economic cloud that opens up and rains on us.
Well, I
Hoping
think
for
that could be the Fed. That
3%
could be the Fed.
ain't happening.
Yeah, that could be the Fed certainly pivoting. Like you said, I think that things are certainly my theory that I started a couple years ago is I started to see trends, like you said, 6 to 12 months, and this trend has been happening for the last 12 months. If we go into the end of the year, so who knows where it just feels like another trend is building behind the scenes here. On all this stuff that's been happening like the last 8 months. But you know, I read on this Facebook, real estate mastermind, these Facebook things. And I kind of have to laugh at that. Talking about affordability, like all these guys that have been in the business quite some time, like, yeah, I don't know why people aren't buying it. Rates are 7.25. I bought my first, I know everybody said that. Like I bought my first house at 18%. Well, your house was only also worth only $80,000 that you bought at 18%.
Yeah,
You
that argument is very disingenuous. I
It's
can't
very
stand
good.
it.
It's a stupid argument. I mean, it's like now you're buying a 450 starter homes at 450. Yeah, at 7.25. You're when you talk about a MI, PITI and all the stuff, the tax insurance add in, you're looking at $33,000 and $3,500. That's a big difference.
Well, I had this chart here and I haven't had time to look at it and see just how accurate it is. I haven't been able to crunch the numbers, but this kind of tells the story, Pat. And I know I showed it to you easier. I just don't know if I agree with the numbers yet. But how much can you buy with a $2,500 monthly mortgage payment, assuming 20% down payment, average 30-year mortgage rate? They're showing here that in 2021 it was 758,000. Today it's 443,000. So let's assume those numbers are correct. And like I
Yeah,
say,
just
I haven't
I
been
mean,
able
I
to.
got to run those numbers because man, when you showed them to me earlier, just a couple minutes ago, I'm like, that's it's. I got to
But
look at
even if
that.
they aren't as far off, it throws
Yeah.
that 7% interest rate argument that says, well, when I was a kid, completely out the window. It it doesn't matter what the rate is. The only thing that matters is the percentage of your mortgage payment compared to your income. That's it. I don't care how we get there, either by cheap prices, low mortgage rates, combination of the two. That's it. That's how you buy a house. You buy a house and go, I make X amount per month, and here's how much my mortgage payment is. I can either afford it or I can't. And right now, I don't care how low interest rates were or how high interest rates were when I bought my first house. I could afford it. My
Hmm.
income seemed to be in a spot where I could afford it, but the house prices were in a spot that I could afford it. I paid 103,000 for it, which at the time I considered pretty high, and I was stretching it. But I
Hmm.
got in, and I got in on a stupid loan, but I got out of it. I refinanced. I got lucky. I What I
Hmm.
bought into was probably the dumbest uh, loan ever, but I had a brother-in-law that was a mortgage loan officer, and I just whatever you say, mortgage rates as it did, according to Miguel, as it did so far, hit a double top. If it breaks and closes above, watch out. Other than that, normal operations.
Yeah.
That's called muddling along, right, Pat? So
Yep. I mean, yeah, we do hit the top, and it breaks out. We get breakouts. You know what do you say when you're going through hell? Keep on going.
yeah, that's right. Well, it's going to
So
be, well, it goes back to what you said, I think, right around November that, when the real estate market's really good, all the mortgage and lending Christmas parties are at stake 44. And this year it's going to be a cheese platter in the
we,
break room.
yeah, it's gonna be interesting to see where all the yeah. Just speaking about that, it's right around the corner here. Before you know it, we're gonna turn around and be Christmas, and yeah, we'll have to start to see where all these Christmas parties are coming now. We're gonna be where they're gonna be at this year.
Well,
Because
we are going to have a meet and greet when I get back. I'm leaving in a few weeks here. And when I get back, so I plan on October. We
okay,
haven't figured out where yet, but you and I and Jackie and Ruby and a few other close friends are gonna meet and invite our viewers to come join us
yeah,
so you
those
can
are
see
fun.
how tall
Those are
or how
fun.
short
Actually,
we are.
pretty cool to see meet people that actually are kind of following us or
Yeah, I enjoy the living daylights out of it. It's a lot of fun. So I haven't. We'll get back. I don't know. I mean, we're kind of leaning towards Gilbert, but I'm open to just about anywhere. Maybe we'll put out a survey on the community page. And the economy's still going to be rocking and rolling pretty good. Then
well,
we'll be
like you
celebrating Sean selling his house by then. So he'll be closed in October. I just know it. So
Yeah, well, maybe based on the fact that we talked about my Christmas party theory. Maybe we'll have to have it out in the at a park somewhere in Gilbert at a picnic table and just put out a spread.
yeah, I'll bring the
Buy some
crackers.
Kentucky Fried Chicken and sit out there and talk. Nothing glamorous. based on the fact the economy is crap in the woods and rates are through the roof, what the hell? We'll get some buckets of Kentucky Fried Chicken and sit out in the picnic out in
I'll bring
Gildersleeve.
and I'll bring the good paper plates.
Okay, all right.
And we'll put Jackie and Ruby in charge of napkins.
Okay,
And
and forks and knives, yeah.
and solo cups.
And
So
bring your own cup. Bring your own plastic cup
bring
too,
your own
because we
cup.
don't want.
Good idea. So I mean, I can already sense the audience getting excited for this meet and greet. It just, I mean,
And I'll go out and buy a box of a box wine. I'll get some box wine.
make sure you get the good stuff. So
yeah, I will. So,
well, Pat, you have a fabulous weekend. I know
yeah.
one of the first comments that we got here was from Harold that said his son is a pro surfer and he flew out to Laguna Beach. So it doesn't take long for these guys to figure out the waves are going to be good. So
Wow.
they're going to be out there surfing like crazy as the tropical storm comes in. I hope it gives us some rain in Arizona because my plants are looking pretty bleak according to my web camera. So we need that to happen. I'm going to be here until I'm leaving the day after Labor Day and heading back. So I'm still broadcasting from the palatial estates of the Rick Elps Real Estate Traveling Roadshow trailer. So, but, and I'm not going to complain about the cool weather anymore because it's been absolutely perfect. It got too darn warm the other day up here. It got to 92 with 52% humidity. So,
wow.
That's what I get about bitching about it being too cold. So, well, Pat, welcome back. Have a fabulous weekend, and we will see you next week.
Sounds good, buddy. Take care, everybody.
See you.
Bye.